Sometimes passing our exams is not about what we know. Sometimes it's about how we express what we know for the markers to actually award us the right marks. Basically, this is a scenario like that because audit risk is a major topic which I know we know. But now the aspect that we are used to is profit-making organizations. But now this is a question on non-profit making organizations audit risk. So if we are not careful about expressing ourselves about what we know, we may end up expressing even too much. Expressing too much in an exam can lead to failure, but expressing correctly in a short form, concisely, is okay. And that is what we want to learn. This question actually is from ACCA practice question, I think 2010, just to demonstrate and look at how it was answered, the expectation and the like. So we'll be discussing basically on how to answer audit questions as it relates to audit risk of an NGO, charitable organization, not-for-profit making organization. So Hukeri, as the name was called in the question, is an organization, not-for-profit making organization. It was established. I will just count through so that we will not waste a good portion of our time and the video gets unnecessarily long. But key things that we need to understand is this: the charity's aim and objective basically is to support non-privileged people as regards sports. And what are those sports areas that they concentrate on? Table tennis, or tennis generally, badminton, and football. And for those of us that are sport lovers, we'll see that at least one of them, badminton, is not a game for people that are less privileged. So this charity is looking at enhancing the opportunity for them, which is very good. So Ukeri has a detailed constitution, so we should be mindful of what they have in the constitution, what they do not have in the constitution, how they manage the business, you see business now, the NGO, the charity, in compliance to the constitution. The constitution also notes that administrative or administration expenses or expenditure cannot exceed 10%. So we need to look out for that. Are they exceeding it? Why are they exceeding it? It becomes a risk area that as auditor you must ensure you put down in your exams. Okay, the charity income is derived. So how they derive their income? Basically, they've given us is either cash collected, and cash collection, what it can lead to. It can lead to theft, Abby. Okay, so don't forget to mention it in your answer. Check could be deposited in the head office branch, and also donation from generous individuals. So they can have donations from shopping malls, from shopping areas, restaurants, and the like, and they collect cash from people. That is one. Two, check could have been deposited for the charity's use in the head office of the charity. The head office address was not mentioned. We don't need it anyway. Then the donation could come from generous individual. Okay. The rule regarding the taxation, now in the place or in the location, the territory of Ukari, we should not forget that they said the taxation is a bit complex. The taxation is a bit complex. And because taxation is a bit complex, we must be mindful of it. These are the requirements. The first question was, what is audit risk? Then part B now is identify areas of inherent risk in Eucharist charity and explain the effects of the risk to the audit approach, and is 12 mark. Then last but not the least is the part C question, which asks us to explain why the control environment may be weak. Basically, this is what we need to work with. So as we move on to quickly discuss the answer to this question, please like, comment, share this video, tell a friend to tell a friend, and if you have any questions, any area that you want us to touch on, don't forget to do that. And for those of us that are just joining, my name is Gbenga Olatunji, FCA from GJAMES Associate Channel. Okay, the first question, which carries 4 marks, is what is an audit risk? And looking at how they approach it, you will see that they define what audit risk is, and they give us the types of the audit risk we have. At the end of the day, the marker's guide shows that if you only answer what an audit risk is, you get 1 mark. Don't forget, part A is 4 marks. But if you go on to mention other risk types that we have in or associated with an audit risk, you get your full mark. So it is good that you mention in your answer all the types of risk: the inherent risk, the control risk, the detection risk, and basically what they are. Short. 1 sentence is okay. Then the part B of the question now is, let me quickly run us back to the question. The part B is identify areas of inherent risk now. So you need to tell us what inherent risk is, then the areas in the business operations of Okere, then its effects on our audit approach. So I go back to the answer. So these are the detailed areas. Don't forget, I mentioned constitution. You need to talk about the constitution and if they are working based on the constitution or not. If they are not working based on the constitution, you need to flag it as an audit risk and the like. The auditor will need to spend time examining and becoming familiar with the constitution and design their audit procedures with this in mind. Then the aspects of the limit of administrative expenditure, which should not be more than 10%, we need to examine whether it's actually more than 10% by the time we are auditing. So it's an audit risk area that we must be able to answer. Then uncertainty as it relates to the future income. Don't forget, it's a charitable organization. They do not have any other business that will generate revenue for them. So we need to ensure in our audit that those income lines going to the shopping mall consistently to ensure people drop cash for the charity. Also, the head office must ensure that people are coming in, maybe in form of advert and the like, and are dropping money for the charity's work. Or the third one, the individual telling people about the good work the charity is doing and to generate. If all these things are not done consistently, then it's an audit risk that going concern issue may actually exist. So then cash donation that they are giving us in shopping malls, in hotels and the like is a risk on its own because it's bound to theft, right? People can steal it and not deliver it. So we must mention it as an audit risk area. Also, the donation from people. Some donation have clauses, like some people can donate and say that you only use this my fund if this and this happen. Okay, people like that or funds like that cannot be appropriated for anything else apart from what the person that donated it wants. Of course, they told us that there exists a complex taxation regime in the country that it operates. Therefore, the audit team will need to familiarize itself with the complexity of the tax rules in the organization as it relates to the country and deal with it. So those are the things that we need to mention. Now we go to control environment. What is control environment? That should be your first thing you are mentioning in the exams. What is control environment? So put it down for them in a simple manner, and that is all. Then let them know some control environment aspects or weaknesses that you think that may lead to control environment. Once this is done, well, you have your mark, and if you approach it this very well as against approaching it from the angle of the object clause of the profit-making organization, I can assure you, you are going to have a lot of marks. So the object clause is very important as we are rounding up as a measure of the functionality of audit risk, functionality of audit approach, functionality of the performance of the managers within the audit, within the organization. From GJAMES Associate Gbenga Olatunji FCA, we are valued to life. Click, like, subscribe, share. We are value to your business.